Hi everyone, welcome to another episode of Weekly Digest with Fibonacci X. In Weekly Digest, we generally discuss about the deals from the last week, early stage, growth stage, late stage deals, and also about some of the emerging trends, any insights which our team may have around emerging business models, industries, etc. So let's begin.
So in the past week, which was week 13, 20 startup deals happened in India. Seven of them being in the growth stage, which is from Series B to pre-IPO stage, and the remaining 13 deals in the early stage, which is before Series B funding. So let's start with growth stage startups. So the first one that we'll be talking about is Country Delight.
Okay. Like as a brand, right? They're already probably able to charge premium because I think Country Delight milk is what, 100 rupees per liter versus Amul, which is like 60, 65 rupees, 67 rupees per liter, right? So that differential is already there. And I think their key promise is the purity, right? And this time they have raised from Temasek, which is a sovereign wealth fund, which also tells you that institutional investors now look at this play as scalable IPO kind of material. So they've raised around 212 CR. I think it's an interesting play. Overall, if you look at dairy market in India, so if you look at, so numbers are probably like a year old, but nothing may not have changed that much, right? So dairy is like a 17 lakh crore market in India, probably doubling again in next 4 years. So roughly growing at 15 to 20% CAGR. And liquid milk, as you can see on this side, just blowing it out for you, it's like half of that market, right? Followed by ghee, curd, and other segments like paneer and other segments, right? So it's a huge market, right? In that sense, a large part of this is, as you see on the left hand side, is unorganized. What we are discussing, where people like Country Delight are building, is the organized market, right? So this organized is still like 30%, 35%. So there's a huge potential for consolidation in this market. If you look at major states which are producing milk, so Rajasthan and UP are top two states, and then you have Madhya Pradesh, Gujarat, Andhra, Maharashtra, all these states, right? If you look at consumption, at home dairy is 80%, 82%. Well, this is important because most of the people are consuming milk at home. What does it mean? That D2C model really has the potential, right? So consumers are consuming 80% of the milk at home, right? In terms of consumption by state, I don't see there is anything surprising. Um, so if you look at key players, right? So there are three. Let's talk about people who are doing B2C. There are many players which have emerged in last few years. So there is Country Delight, Purish, White, Sarda Farms, Amrit, Nature Delight, which are doing digital only. So you don't have a physical store, but you also have players who are doing physical stores plus digital, right? These are some of the players. Uh, Investment into dairy has been significant over last roughly 10 years. So you have domestic investors, largely corporate like Britannia, Godrej, Dabur, Reliance. You also have foreign strategic investors, and then you also have PEVC funds, right? So these are the PEVC funds which have invested into dairy sector, right? There has been significant M&A into the market for last, 10 years, which is interesting. So there is always, what I'm trying to imply by showing this slide is there is exit options are available because M&A is easier than going for IPO, takes scaling and it takes number of years. But even if you get to the growth stage, you can always be acquired by a bigger company. So there have been VC deals, etc. Fireside backing Dev Milk Food, IPV backing Happy Nature, Avishkar backing Mo Farms. Um, so these things are there. So I think this potential is there. Like I said, 80% of the consumption is, uh, you know, happening at home, and large part of the market is still not structured, right? So I'm not surprised someone like Temasek sees potential in this market. The potential is there, and yeah. So those were my thoughts. Anything you guys want to add? Happy to hear.
So, like you mentioned, the price point for their milk products is bit high from the other players. So, and they have a subscription-based model. So, there are VIP membership in their subscription-based model. Up to 40% discount customer get on coconut and the milk product, and from 20 to 80% they get discount on other products. So minimum people get 20% discount on each and every product, which is like, I think that is the most uh, attractive thing for the customers to take their subscription. I have personally used their products, milk and the other dairy products, paneer, and I think their products are pretty much good from the other players.
I still feel it's a bit expensive. Anyways, I'm like a poor founder, so I can't really afford this. 100 rupees per liter kind of milk. What was interesting to me that they are also doing, fruits, vegetables, other grocery items. So I think they're trying to do cross-selling and upselling to the existing customers. I think that opportunity will also open up. There is another app called Doodh Wale, other players who are trying to build, morning needs, everything you need for your breakfast, etc. Quickly. So I think in metro and tier one, this will work out fine. Larger scale, anyways, we'll see how it evolves in future. So let's move to the next one.
So the next startup that we'll be talking about is Dozy.
So Dozy, I think, provides real-time patient data, right? So they put their devices under the mattress, which connects to Wi-Fi, and they track the vitals for the patients, including blood pressure, heart rate, sleep, stress, and obviously oxygen levels, right? And I think the obvious use case will be in the hospitals, right? And also for at-home care patients when people are not well and they are not hospitalized but at home on bed. I think this can be useful. I think they are already funded, so their investors are already, they have prime venture partners, uh, family offices, 314 capital. So that way it seems to be funded. The team seems to be experienced, I think. Do you know their revenue model? Any Preksha or Achal or what's that?
They have a subscription-based revenue models. Yes. So they have two subscription. One included live dashboard, daily health card, and the weekly and monthly report. And the other subscription, it's cover live dashboard, daily health card, weekly 24/7 monitoring, plus they have experts like care coach and weekly health checkups and the complete 30 days care checkup. So the pricing for the device introductory offer, it's same, it's $345, but the subscription price is different. So for the first subscription, it's $25 per month, and the complete subscription process with telehealth, it's $50 per month.
Got it. Let's move to the next one.
So moving on to the last startup, which is in the growth stage, is ApnaMart. So ApnaMart basically operates a brick and mortar grocery stores where people can walk in and purchase products like a regular grocery store. But what's different is that they have an app through which people can order these products within 15 minutes. They guarantee a delivery through the app. So they have raised approximately 215 crores in a mix of equity and debt, with a majority in equity, which is 175 crores, and a debt of almost 38 crores. They have generated a revenue of almost approximately 60 crores with a growth of 86%. But in pursuit of the growth, they have increased their losses by 51%. What the market for online grocery retail? So it's growing at a CAGR of 50%. So right now, currently the market is projected at 85,000 crores for online retail.
Okay. And what do you think is interesting about them?
So what's different, which I think what is different is that they are operating through a franchise model. So they are not opening the stores on their own, but they are operating through franchises. So they are able to partner up with more locations. So right now they are currently in 14 cities, which includes tier 2 and tier 3 cities like Ranchi, Bilaspur, Hazaribagh, and many more. So as we have also discussed, players who are into hyper-local delivery like Kirana Pro in the previous weeks, which are operating in metro cities like Bangalore. This is one of the brands which started from tier 2 cities.
So basically, it's like Blinkit for tier 2, tier 3 towns, plus the physical store combined into one.
Yes.
Right? Yeah, I could see that because see, the aspirational buyer already has the similar kind of pattern, right? So there could be potential, right? And how much have they raised at what valuation? Do you know?
So they have raised approximately 215 crores with a mix of equity and debt. They raised it at a post-money valuation of 738 crores.
Got it. Got it.
Okay, so let's move on to the early stage startups. So the first startup that we'll be talking about is Taxina. So what does Taxina do? Taxina has a ride hailing model which is similar to what Uber and Ola and BlueSmart are doing. But what's different what they're doing is that they have a subscription model. So where players like Uber and Ola work on a commission based model where they charge approximately 20 to 25% of the total earnings that the drivers earn, Taxina charges them on a subscription model. So they have a fixed amount that they charge to these drivers on a monthly basis. They have raised approximately 1.5 cr, and they claim to be the only player in Chennai who has an LOI to who have an LOI to partner up with the auto drivers in Chennai.
Isn't Rapido doing the same thing, just moving to the subscription model and doing away with the commission? My only two observation is, I mean, like I discussed with you earlier, why do you assume that the legacy players are going to take this line down? They already have the numbers, they already have people on their platform. So I think there will be some response, right, in terms of competitive dynamics in this market, which we will get to witness in the coming months. Um, but yeah, it should be interesting. Yeah.
So let's move on to the second startup. So the second startup is called Firefly Diamonds. So Firefly Diamonds offers 14 karat and 18 karat jewelry made from lab grown diamonds. Currently, they are operating through offline stores which are present in four metro cities, that is Delhi, Pune, Hyderabad, uh, and Mumbai. They have raised approximately 25 crores from Westbridge Capital.
Yeah, so we have our in-house expert Preksha. I think she will add something to this.
So we have been working on lab-grown diamond industry for the past 3-4 months, and we have had a couple of conversations with the founders and experts in this area. If we talk about the market size, it's $299 million in 2023, and it's growing at 15% CAGR. What we also understood after talking to the experts was that video consultation was a differentiation for many players, so we wanted to test that out ourselves. We did a couple of calls with many of these big lab grown diamond players, around 10 to 15 players, and we what we found out was that the challenge lies in the execution. So there were a couple of challenges which happened in booking a video consultation session with any lab grown diamond player, which ranges from the ease in which you can select the date and time of the video consultation, or the consultant not showing up on time, or it requiring follow-up calls from the consumer. And the reason behind that is also the same people who are on the shop floor are doing these video consultation calls, so they have to cater to the customers on the shop floor as well as if they are provided with an inquiry like that. One thing I also noticed was that there was no aid or help in the decision making process for a lab grown diamond jewelry. So, for example, many of these consumers are first time buyers. There are not a lot of things which they know or are a little apprehensive to about what to know about a lab grown diamond jewelry before they purchase it. So there should have been a set of questions which can help them in processing the decision they will make to buy a particular jewelry. Another thing, there is one good thing which I found out in a couple of players was that while they were displaying their products, they were also talking about some cross-selling options which would work with the jewelry piece which they are showing me. And in the manner of the conversation, what was also very relatively clear was what is the brand story they are trying to tell me. So, for example, if someone is selling on customization, then by conversation, I'm able to identify that this is their strong point. But while going through this process, one thing became very clear to me that although it can be added as a differentiation, but there are a lot of challenges which exist in the execution bit of it, which very few players have been able to crack yet. And also one other thing is LGD is not this is our hypothesis that LGD will not replace diamond anytime in the coming 20, 30, 40 years, but it is going to take the lower pie or the smaller pieces bit of the mine diamond segment. So the most sold pieces are in 1 carat range. So these are few of the learnings I have got through first-handedly engaging with lab-grown diamond players from an expert point of view and from a consumer point of view.
What do you think is driving the demand for lab-grown diamond?
I think what is driving the demand is uh, higher disposable income, and second, because lab-grown diamond stores are also increasingly present in tier 2 cities as well, so they look at it as an alternative for mine diamond, which would cost them 3x 4x times more. So there are a lot of first time buyers which are coming in this section. So let's say, for example, there is only 5% of population in India or lesser than that owns a diamond right now, but this portion can get bigger with lab grown diamonds.
Got it, got it. But the buyers will be most likely uh, high net worth individuals, right? And it's not a value seeking buyer. It's a buyer, it's a frivolous kind of expenditure, right? Spending 50,000 or a couple of lakhs, right? Um, and I think once you have lab grown diamond jewelry, I don't think if you move in your social circles, people are going to ask you whether it's a real diamond or lab grown diamond, right? So it doesn't really matter. So I think over in the coming years, probably the stigma of buying a lab grown diamond will also subside and it will become pretty normal, right? And so that should be interesting. But I think it's like a typical offline retail play for me. It's not online because the trust factor only comes once you have an offline store. So right from the beginning, I think companies, what even this company probably already has a lot of stores, probably 15, 20 stores, and they are now trying to expand on that. So there are some, creativity which can be done, how you structure that offline retail piece and how you build that out instead of committing high capex upfront. So, so even with our founders in this space, that's what we are trying to address. Like, how can you break that pattern? How can you differentiate? Right? So that's the idea. Let's move. Let's move ahead.
So the last startup for today is OneStack. So what OneStack does is it offers solutions like core banking, mobile banking, UPI switch, that is the platform through which customers can make transactions on the UPI platform. Uh, BBPS switch, which is the platform through which people can create mandates for auto payments of their expenses, allowing regional and rural banks to modernize their operations and enhance services. So, what OneStack has done is that it has partnered up with approximately 200 cooperative banks, with seven of them being state cooperative banks. Out of the total, approximately 1900 to 2000 cooperative banks, which has allowed these regional banks to take up, and the customers of these regional banks to take up these UPI payment and allowing mandates for their own banking services. So they have raised approximately 16.5 CR from Pentagonal Ventures, Yatra Angel Network, and 100 Unicorn in their Series A round.
So they're building around our theme also, right? Which is around Bharat and last mile connectivity, which should be interesting. Actually, we are connected to the founders as well, and it's an interesting play. I think they have already onboarded some 200 odd banks, I think. Um, so let's see. I think again, here are cross-selling, upselling opportunities to those banks. Once you have plugged in your core banking system, there are other services which you can sell. So should be interesting. So do we have any other startup?
No, that's all for this week.
Perfect. So we'll try to make these weekly digest videos as interesting as possible in the coming weeks. So if they are little rough, little unstructured in the beginning, please bear with us. But I think over next 3-4 weeks, we try to bring sector level insights and also trends to you, not only giving you data and high level generic comments. So I think it will take us, probably a few more weeks to fine tune and refine that process. Till then, please support us, watch our content. You can find us on LinkedIn. Achal can also add, our link, etc. You can pitch to us in case you're a founder building around our theme. You can read our thesis on the website and then pitch to us, and then usually we respond within 24 to 48 hours. So it should be interesting conversation. Yeah. Thank you.